how the breakup of old and new economies. Yes, please. Any doubts? All right. So we have also seen how the breakup of old and new economies. Every 8 years, we have seen that there's a cycle alternately occurring for old economy as well as new economy. So this is the time to bet on new economy stocks, not the old economy. So globally, if you see, all the new age companies would not be doing well. So if I get some questions from the students, sir, is it the right time to buy Paytm? Is it the right time to buy Zomato? For trading, maybe yes, because the prices have already fallen a lot. So maybe when the market is recovering, they may recover little faster, but not from long-term perspective, at least now. There will be an We will get ample time to enter into these stocks when the right time comes. So I would not be suggesting to buy any new age companies, any startup. Even startup is a new age, guys. You can note down that point here for the new economy stocks. The major sectors for new economy, you can note it down. So virtual business, startup business, metaverse, IT, websites, app, telecom, these are all new generation companies, platform providers, and old economy, something which you can see and feel. These are all your old economic stocks. So right now you should be focusing on the stocks coming from these sectors. You should be having in your portfolio real estate stock and oil stock and metal stocks, housing, finance, banking, cement, infra, power, capital goods like BHEL. So all these stocks should be forming in your portfolio. Alright, so let us move further. Okay, so when the market starts to crash, precious metals, gold and silver give you about 30 to 40% return in just 6 months because of the liquidity shift. Banks with high exposure to SLR. I've given you an example of Union Bank, why the price was going against the market trend during the previous market crash. So there may be some fundamental reason also why the stock price is rising. There may be a game also which is being played by the operators. Only knowledge would save you. I cannot tell you that you have to sell the stock that time or you have to buy the stock that time. You have to first find the reason behind the rise or fall. You know the valid reason, genuine, authentic reason, then you will be able to take a decision. So that time Union Bank was a buy, even though it was little expensive. It was not an operator game. And most of the time in government companies, operators will not be active. Keep this point in mind. It doesn't mean that you have to buy government companies. I hate government companies because the management is not at all ambitious. They are working just for salary. We want to invest into companies where the management wants to grow the business pretty fast, who are from IIM background, who are from big management B schools, who have already got a proven record of some previous companies. Such kind of companies only we got to be targeting. So here are a few other examples how the old economy and new economy stocks have given the returns over various 8 years time period. On a monthly chart of the Sensex, we have 8 years of bull market followed by consolidation or fear in the bull phase. Old economy stocks like natural resources, roti, kapda, makan, like metals, infra, cement, power, oil are expected to do well, while in a bear market or a consolidation phase, the new age companies like IT, pharma, media, telecom. Even media, pharma can also be written in new economy. Let me edit that point here as well. So this may turn out to be 2024-25 because of the pandemic. If pandemic was not there, today we would have been 2 years advance. That means whatever that we see market after 2 years, that would have been today itself. And this may become 25-26 also. I told you 2024 we are going to review. Then we'll get to know, should we wait for another year or should we exit, should we wait for 2 more years. But for sure Sensex has to be 1 lakh. This is the first criteria. Till then, there's no need to even check. How much is the Sensex now? Approximately 55,000. Or 60,000. So at least 40,000 it has to rise. Then that question comes whether we are near to crash or not. Before that, there is no question at all. See, this is the market cap. This is what is a net worth of Indian Stock Exchange. If you want to buy all the listed companies in India. The stocks that do well, irrespective of the market cycle, are called as secular stocks. Again, an important point. What are secular stocks? Just like a secular political party. So they are not focusing any religion. They want every religion to grow. They want every type of class of people, low class, middle class, high class. Such kind of parties are called as secular political parties. Likewise, we have also got some secular sectors wherein they perform good even in the old economy phase and even in the new economy phase. Of course, when market crashes, everything falls. But secular stocks are the one who come back to normal pretty fast. Even after falling, they recover faster. So the stocks that do well irrespective of the market cycles are called as secular stocks, like private retail banks, Kotak, HDFC, etc., NBFCs, insurance companies, retail, auto and auto ancillaries, consumer discretionary like white goods, washing machine, TV, ACs, etc. See, these stocks has got nothing to do with old economy, new economy. Their business continuously grows by a normal margin. So it may be that the dollar rate goes to 80, the dollar rate may go to 70, the dollar rate may go to 100. So these things do not matter to them. There may be a massive recession. These things will not matter to them. Of course, when the market falls, I repeat, everything falls for once. But quickly to recover are the ones which are secular stocks. These secular stocks, neither we can say they are purely old economy, nor can we say that they are purely new economy. So they are in between. That's why they are called as secular. Cyclical stocks. In the second half of the bull market, the cyclical stocks do really well. See, broadly the sectors can be divided into four: value, defensive, cyclical, and then secular, and then we also have growth. Growth sector is also there, but again that growth sector is the one which continuously grows. Like say example NBFC, it grows by 15, 20, 30%, whatever its standard growth rate is. Like say example Bajaj Finance, it has been growing at 30% per annum no matter what happens to the world. So within this secular stocks, there may be some stocks which are totally growth oriented irrespective of the micro and macroeconomic factors. So they have an indigenous growth. You talk about HDFC Bank, if you see the graph, recession happens, this happens, that happens, but it grows by 20% every year on year. That's a standard benchmark for them. That's the target they have set and they achieve it. And they stop at that target. Extra growth, they want to push it to next year. So those things are called as growth stocks. So there is a phase for growth stocks, there is a phase for underperforming sector, there is a phase for the defensive, value traps, that's so many. Cyclical stocks are the ones which perform only during golden period of the market. They do not perform in the other years. So I told you the old economy stocks are like the 8 years cycle which they follow. So they continuously perform for 8 years, then in 8 years they go in hibernation. Hibernation in the sense like Kumbhakarna, they keep sleeping. So in the last 8 years, if you see the graph of cement companies, infrastructure, you see the graph of oil marketing companies, oil and gas, like ONGC, IOC, like GAIL, they haven't risen at all. Let's have a look quickly. ONGC and GAIL. See? So once that they had risen sharply, from 12 rupees it had gone up to 200. That's an amazing return. This was the old economy phase, right? Then from 200 we are down to 133. Look at this, how much of underperformance it has got. Like this phase is going to come again now. So a massive rise, then goes in hibernation. Again a massive rise, then goes in hibernation. Massive rise, goes in hibernation. This is how it is going to be. By here maybe our life will end. Because these are big 8 to 10 year cycles. So this is a time to bet on these kind of stocks. And this is all the demand supply game, inflation game, demand supply game. Defensives, when read through economy, pharma, consumer staples like FMCG, IT and media. These are the sectors which perform better when there is turmoil in the market. So I told you in the pessimism phase, when everything is lackluster, your old economy is totally deteriorating your capital, the safe haven for investment, the best place to park your funds is in the defensives. Then comes the value traps, especially government companies. After doing fundamental analysis, you will say that sir, every government company looks very, very good for investment. An example I'll tell you. BHEL. BHEL company is available just for let's say 50,000 crore. Is it cheap or is it expensive is what we will be learning now. Point 1. This company has got at least 40 factories. It has got 40, I would say, land banks in all over India, and all of them in the center of the cities, especially metro cities. And best example is your Lingampalli is approximately 2000 acres land. The land value there is not in acres, but it is in square yards. How much square yard? 1 lakh rupees a square yard is the rate in Lingampalli. 1 lakh rupees a square yard. Now you can calculate for 2000 acres what could be the value. Let us be conservative. 2000 acres means 4800 square yards is 1 acre into 2000. How much is it? 96 lakh square yards. So Lingampalli property only is 96 lakh square yards. I want to be very conservative and give only 50 lakh value to it. Per square yard, sorry, 50,000. Per square yard, I am taking the value only as 50,000. As we grow with the time, the value would only increase. I am calculating from today's perspective. So how much is it? Units 10, 100, 1000, 10,000 lakh, 10 lakh crore, 10 crore, 100 crore, 1000 crore, 10,000 crore. Only the value of Lingampalli property is equivalent to the BHEL total market cap. And there are some properties which are more expensive than even Lingampalli. It has got in Delhi, it has got in Kolkata, it has got in Mumbai, it has got in Chennai. Chennai values more than this one. And in Hyderabad, there is another land bank that they have got. The company has got more than 30,000 acres land. Can you believe it? Which they acquired 30, 40, 50 years back. After India got independence, from that time these were all outskirts. They got it all in auction for 2 rupees, 3 rupees acre, believe it or not. Only the land bank value, I should say, is minimum. I'm talking about the minimum price, 5 lakh crore. And every other company like that, NMDC. NMDC is such an excellent pick that it has got a cash balance equivalent to market cap. I'm talking about the cash in bank. So this is 10 times. The company is available at 10% price. It is available at 90% discount, and most of the government companies are like this only. They have got huge land bank. Even MTNL, BSNL, the telecom business is totally crashed. The company is into heavy losses. But even today, if they sell, anybody who is having the share would become super rich. That much land bank is there with MTNL, BSNL. It is better than even BHEL is. So government companies are all value traps, meaning they look very much undervalued, but still the price will not rise. They will remain like this in discount forever. This discount is not today. I have been seeing since 20 years. My dad has been seeing since 35 years. They say what to do? The value will be undervalued only. When will the value rise? When government takes a big decision that we want to shut down the government companies. That is going to be a good news. Or if government says that we want to privatize government companies, then this price will shoot up by 10 times. Because I'm not at all talking about the core value business. The core value business is more than 50,000 crore. Only the land bank is 5 lakh crore. If government stops this business, if India wants to become rich, they have to take these extraordinary steps. Stop all the government business and sell the land. Or put the land under development. All the tax in the country can be tax free for 5 years. If they do this, what government has to do? Stop all the government businesses and then sell all the land bank or develop land bank. Let it run like a real estate company. Let it auction all the flats after construction. Like how the state governments are doing, central government should also do it. The wealth will shoot up by 10 times. But to say it is all easy, what is the problem? The government employees will come under strike. It's not that government did not try it. Every time they just give one line of statement, all the employees come on strike on road. We want government job. We want government job. Why? Because we don't want to work. We want free salary. We want pension. That reservation, quota, these things they don't get elsewhere. And because of that, because of the vote bank, government is not having the courage to take this bold step. You know, Indian Post Office, how much loss it makes? Just have a look. Every year, what is the loss of Indian Post Office? You'll be surprised to know the figure. Look at this. 19,000 crore loss in 2000, but that was pandemic. Let us at least see this. 15,000 crore loss. This is the loss what Indian Post Office is making every year. 15,000 crore. Why? 80% of the expenditure is employees to the salary to the employees. 80%. That means whether they work or not, whether people are coming to them or not, they have to pay them. Not only that, even the employees who have retired, they have to pay the pension till their life. Like that kind of setup is already done. Lot of countries got independence after we have got. Say example Malaysia, Singapore. Singapore, Malaysia got independence in 1960s. They were also under other country rules. But they could recover very fast, and today their per capita income is at least 4 or 5 times higher than India. Why? Lot of people give me answers saying that sir, those are small countries now, very quickly they can develop. When I give an example of Japan, Japan had the entire country was devastated because of the atom bombs. Yet they recovered very fast, and today it is one of the top 3 economies in the world. Why India could not grow? Why those countries could grow? The reason is not the area of the country. How much of a small a country might be, it doesn't mean that it can grow very fast. There are a lot of countries you will see in African continent which are not even 10% of ours, but they are very much underdeveloped. So size of the country doesn't matter. If that is the case, then United States is 5 times bigger than us, Russia is 20 times bigger than us, Australia is double than us. Then why? So size of a country, keep in mind, doesn't matter in growth at all. China, take an example of China, such a big country in area wise. 30 years back, we were ahead of China. Go into Google and type it. In 1980, we were much ahead than China. Then why is that we were not able to grow? The biggest problem here was it's like a termite, when during the first Prime Minister, Jawaharlal Nehru, a big decision was made which was actually totally against our country's development. He said that government should also be into business. Government should run a business and government should provide employment. That is where a termite was developed in our economy. From there on, government kept on infusing funds in all the government companies, and it is all jamming the money. Because you can see the management will not be ambitious. Today, if I am a government employee, why should I be worried about the growth? My salary is going to be the same. Let's say I am making 1 lakh a month. Even with my hard work, I'll make 1 lakh a month only. No incentive, no bonus, nothing. And even if I have that energy, I have that kind of patriotic feeling that no, our country has to grow no matter what. The employees under me should also be that much kind of ambitious. Na? If I am like that, employees will throw me out through voting. Hey, this guy is not letting us sleep and relax. Continuously tells us to work, work and work. They will throw me out. I will not survive. Because the environment, the culture has become like that. And that is the reason why I tell you that India can become third richest nation in the global. Maybe in our lifetime we will not be able to see second position or first position for India. Till this is there. Privatization is must. The moment they announce privatization, stock market may hit upper circuit, You will be surprised by the valuation of the market. But despite all that, we are going to grow. But potential growth, we should have been in the first place. At least in the second, third, at least where China is, at least where Japan is, we have lost 50 years of our life. That golden period where all the countries were growing. See, World War One happened, two happened. All the other countries which were not involved took the advantage and they grow. India was not involved in it, yet India could not grow. That was a good time. All the European countries were under crisis. We should have been much ahead than Europe by now. Look at this. Where is euro currency? Where is pound? Where is Indian rupee? The ratio should have been opposite. But whatsoever, a number of reasons, this is the part of the life. We have to accept the reality and live. There's nothing much we can do about that. But to be knowledgeable while you're investing into market, while doing into fundamental analysis, if you come across government companies like BHEL, do not buy. Please do not buy government stocks. You will say, sir, this is the value, that is the value. I've been seeing this since 20 years. Price will not rise. All the government company banks compared to HDFC are at 90% discount. If you look at the fundamental value, if HDFC is trading at 100 rupees, the PNB bank and all that of the same level are trading at 10 rupees. You will say, sir, it is better time to buy government banks then. That value gap will always be there because that's a private bank, this is a government bank. A great investor says, Madhu Kela, his name is Madhu Kela. He always says one statement. Who used to run your Reliance mutual funds and all that. Now he's a retired guy. He's managing his own funds. So this guy used to say that always bet on the jockey, not on the horse. Generally, what happens? We first read the company, then we read the management, right? This guy says that first you read the management, then you read the company. Just doing fundamental analysis is not sufficient. Also do management analysis. Also do qualitative analysis. There are two types of analysis: quantitative, qualitative. Quantitative means we are working with the numbers. What is the profit, loss, balance sheet, loans, assets, everything. That's what we do in fundamental analysis. Apart from that, within fundamental analysis, there is management analysis also. And he says management analysis is double the importance of the quantitative analysis. You work with the numbers and everything is okay. That means the horse is good. He says in a horse race, we know that this horse is pretty good and has always run the fastest. If you make the horses run, a particular horse may always come in the first. So that horse, there is no doubt that it is excellent. But if the person who is running that horse is not an expert, then maybe that horse will not win the race. So he says that winning the race is not in the hands of horse, it is in the hands of the jockey who is running it. That's what he says, compares that with the companies. Company may be having excellent business, but if the management is bad, company will not give you returns. Company's business may be worst, but if the management is good, the companies will stand out. I'll give you an example of Apple. You know Apple company, the iPhone maker. This company was under bankruptcy 20 years back when this company was venturing into iMac and all that. Not 20, 30 years back. So the share price used to trade in penny stock. It was a penny stock. Why? Because huge loans and company was not able to pay up. I'm giving example of both good management and bad management. So Apple company was totally under crisis, though the business was good, but because of the huge loans and all that, and whatever that they planned to achieve, they could not achieve it. The product got failed and everything happened. So management had decided that it is better to wind up the business. But within this management, there was one guy whom the world remembers even today. He is no more. Steve Jobs. Steve Jobs was a key management person. He was the head of Apple that time. This guy stood out among the crowd of management, only guy, and said that I do not want to give up. He did everything to take that company from debt trap to the most valued company today in the world. That is why people admire him. There are a lot of people who look for his quotations. He is the one. He died recently out of cancer. See how many results are there. There's a guy, most famous guy, known for Apple. Today, Apple is the top company because of this guy. Otherwise, Apple would not have been there today, guys. Today, there would not have been Apple at all. This is one good management example I've given you. Now, I'll give you an example of bad management. Kodak, Nokia, and General Motors. All these companies were the market leaders, were the top three companies 30 40 years back. Kodak was the most valued company before Apple had come. Most valued company, most expensive company in the world, Kodak. What happened? Technology disruption. So some game changing thing happened. Mobile came into picture and the quality of the camera improved so much, and with the least space, Kodak did not venture into that area at all. Today, the camera setup in mobile should have been of Kodak, but no, he did not accept it. He said that I have my own camera, I do not want to indulge into any other business. You need to understand the changing trends and accordingly you have to adapt yourself. If the demand is there for the minute cameras in mobiles, you should start manufacturing it. Forget the big cameras and all what you are doing. Focus now on the change in technology. Had he done that, today he would have survived. May not be the biggest company in the world, but at least he would have been survived. It is already under a huge debt and about to collapse anytime. You may not find this brand in the next 10 years, who used to be one of the top brands. Nokia, we all know well. Till 20 years back, the most desired mobile was Nokia. Even today, I would say, from network perspective, from machinery perspective, no one can match Nokia. Far away, Samsung, Apple, whatever, from network perspective, nothing can match Nokia. But yes, from software perspective, Nokia is way behind. Android approached Nokia and stated that, see, there is a change in technology. People want to adopt to smart mobiles. Why don't you put the Android software and then sell your mobiles? Ego. He said, no, I have my own application. I do not want to depend upon anybody else. That changed the fortunes of the company. A huge factory in Nokia in Chennai got shut down. Later, Microsoft purchased it. Now it is regretting why did it purchase. Now they have started manufacturing Android mobiles, but they are very late. They haven't got even 10% market share. Forget 10%, not even 1% market share. They cannot compete with the likes of the companies of China. Vivo, then you have got say Oppo, you have got Xiaomi. Their prices are so competitive, people do not want to buy Nokia. They have lost the game. Then you have the General Motors, Ford company. Remember Ford? There's no more Ford now. You won't find Ford brand, no Ford showroom, no Ford cars. This company was the biggest automobile company in the world from Germany. Did not adopt to the change of technology with the high-end energy efficient engines, green energy, electric vehicles. And today it is almost bankrupt. So all this is a game of the management. See, some management are so adamant that I want to run like this only. This is my growth agenda. I do not want to adapt. I do not care about what is happening in the world. That is very bad. I should say the company which adopts the most with the growing changing trend, and it knows what can happen in future and then accordingly it adjusts, is Google. I love this company. It has become part of everyone's life. It knows how to make lives convenient of the life of the people. There's no competitor, monopoly. Do you use any other search engine apart from Google? Android mobile, we all are already using it. Then Google Translation. Then we use Google Maps. So we do not find any competitor at all to Google. It has become part of everyone's life, especially because of Android. So that he knows it before. Before we come into metaverse and there's a boom, Google must have already started its preparation. Its parent company is Alphabet. So if at all I would want to buy any US stock during the new age company cycle, the first company I would enter is Google. Then of course metaverse. Metaverse also I'm pretty confident should do well. So Facebook would be in my buying list. Not now, when the new age company's time comes, which is still far away. They may rise now, but they will not rise to the level from where they have fell. That time will come only after market crash when the new age company's time cycle comes. All right, let us go back to our content. Just hold on, guys. I'm getting a call. All right, sorry for interruption, guys. All right. So breaking the cycle into 8 years, we know that when we have to be into the old economy sectors, when we have to be into the new economy sectors. But end of the day, always read the management before reading the company. We have seen a lot of examples, government companies, private companies, both, how there are value traps. Do not ever remain into a company which is very adamant, which says, no, this is my product, this is my world, this is what is my area. I do not change according to the world has to change according to me. I don't like such companies. There is one company I'm not able to recall which has totally changed his business according to. Okay, talk about Reliance Industries itself. Talk about Reliance Industries, Mukesh Ambani. Anil Ambani and Mukesh Ambani, two big examples of the sound management. Anil Ambani could not adapt to the technology change. CDMA phone is what he bought, did really well. But when there was a competition that the prices were continuously skidding, he should have also done the change in the strategy, which Airtel did it. I would say that against, see, remember how many telecom companies had come that time? Uninor, Telenor, then Tata Tele, Tata Docomo. Remember all these names? Spice, I think Spice was also there. Now the n number of companies were there, but only one survived there. that is Bharti Airtel. Jio has come now, I'm talking about the history. Reliance Communication, all of them gone to hell. Vodafone, all into debt. Only one company survived, Sunil Mittal, Bharti Airtel. So if I talk about the sound management, this is one example, that is Sunil Mittal. I compare this guy with Mukesh Ambani. So in future, if any new company started by Sunil Mittal, I would be excitingly buying it. Provided there is a sector support, old economy, new economy support is there. So one thing that he has got a proven track record, that against the flood, against an kind of earthquake in the telecom industry which had happened, only this guy stood up. Then came a second disruption. One was all the Raja scam. That time we had a telecom minister Raja who did lot of fraud and everything. So that's the reason why all the telecom companies name came out. But Bharti Airtel was not involved in any kind of scam. It paid premium prices for the auction. He said that I don't want to give any bribe. I'll pay the reasonable price. So that was again an indication that this guy has got nothing to do with the politics. He has got his own ethics, his own rules. And then when Jio came up with a free offer for 1 year. Yet he survived. The target of Jio was Bharti Airtel. He wanted to kick it out. But then it survived that kind of storm also. And today Jio has realized that he cannot compete with Bharti Airtel. Let us both grow the business hand to hand. Then I'll also talk about Mukesh Ambani, whose core business was only oil and gas. But he knew it. Even before we started getting the electric vehicles, he knew it long back that oil and gas does not have future. Going forward, the petrol or the diesel demand will reduce because of pollution, because of the countries getting attracted to electric vehicles, because of the awareness which is happening among the crowd. He diversified his business into various sectors, Reliance Retail, Reliance Jio. Now even if oil and gas business totally shuts down, still Mukesh Ambani will stand out. So betting on the jockey is important than betting on the horse. Even in the horse race, if you have ever been to any kind of races and all, people bet on the names of the persons they jockey. It is the way that how they are able to run that horse. All the horses almost have the same energy, but it is your talent whether you have to pinch it, or when you have to like tighten the belt, when you have to loosen the belt, how you have to stand out so that there is the least friction with the wind coming in. Your gesture is very important. So these things are all the talent what the jockey has got. So always understand, if any horse is winning, the credit doesn't only just go to horse, it goes to the jockey. He is rewarded, not the horse. Then later, a jockey may pay to him, that may reward him by giving very good amenities and all. But the reward always goes to jockey. So always bet on the management before the company. And we'll see how we can read the management as well. So all the examples of all the old economy, new economy stocks, you see that very good period, then lackluster, very good period, lackluster. So this is like hibernation only. I would not say 90% is a good return in 8 years of time. Okay. And here it is negative in fact. So this is of course superlative returns. Same thing happened here also. Good returns, negative returns, good returns, negative returns. Especially metal stocks, you'll find very beautiful pattern in old and new economy stocks. Look at this, power stocks. Amazing return, then lackluster, amazing return, lackluster. Amazing return, hibernation. Very good return, hibernation. This is a T-bond cycle. T-bond cycle and inflation cycle both go hand in hand. T-bond means treasury bond. Treasury bond nothing but fixed deposit in government banks. You can talk like that. So if you see, there has always been cycles like this. Up, down, up, down, up, down, up, down. It reaches peak, again it goes up, down, again reaches peak, goes up, down, and down. This percentage. So whenever the inflation is high, The T-bond cycle will also be high, the fixed deposit will be high, there will be high interest rates for the loans as well as fixed deposits both. So if you observe, it is always in a zigzag mode, right? Whether it is rising or it is falling, it is always in a zigzag mode. If we are going to learn this in technical analysis. If I draw some parallel lines here, this is the lower end of the parallel line, this is the upper end of it. So whenever I am drawing a line and the T-bond cycle reaches at the top of the line, it is a signal that market is going to turn. That means market from bullish is going to become bearish. It is totally an inverse cycle. That means whenever the interest rate is high, the market collapses. Whenever the interest rate is low, the market makes a bottom. So during this, when I draw a line here, during the peak of it, we should be investing into the market, because that is the highest point of the inflation which has happened. By then market would have already crashed. And when you see it is reaching to the lowest ever point, that is where you exit from the market. Alright, is the point clear? I told you market is 6 months in advance. So when you draw the lines here and when you extrapolate this on the stock market indices, you will see exactly like this. This is whatever the pattern you see here, you turn around 180 degrees, that will be the pattern for the stock market. Both of them move totally opposite. We'll get more examples to see in future, but for now, what is very clearly visible here is I can draw some lines here. These are the parallel lines, and the moment that graph touches that upper end of the line, time to take a reverse bend. The moment the line touches the lower end of the line, time to think opposite. The cycle is going to turn. Alright. So this ends with our market cycle. Now we are going to jump into fundamental analysis. Okay, there is an exercise sheet which tells us exactly at how much far away we are from the crash. That is very important for us. Let us see where I put that. Here. Crash is imminent. This is what this slide says. How do I know whether I am very close to the peak or little far away, or there's still room left for the markets to rise? All this has to be worked in the euphoric stage, guys. You have come into euphoria. I told you in euphoria, that's a kind of honeymoon period for the market. Amazing returns can be made in the shortest time span, but if you do not timely exit, maybe whatever that you have gained in the last few years, you may lose it. The vehicle is moving with the highest speed, guys. Simple words to say, the vehicle is moving with the highest speed. Accident may happen anytime. Before that, we want to enjoy the full speed. We cannot exit early also, because we'll miss out on that speed perspective. So that is why exiting early also doesn't make sense, and remaining for a long time also doesn't make sense. That is why this exercise does make sense. This will tell you whether how near are we to accident. Are we 1 minute away from accident? Are we 5 minutes away from the accident? Are we just few seconds from the accident? This is very, very important for us to work out. Don't have to even touch this sheet now. I told you 2024. I told you what I would be doing in 2024. I'll be reviewing. What I'll be reviewing? This is what I'll be reviewing. This will tell me whether we are close to the crash or not. It has got a combination of micro, macro, asset cycle. Everything has come here. Everything. So let us discuss one by one each of them. First question that you need to ask, or you need to check through Googling or through newspaper or maybe through even television channels, information is available everywhere. You have to put in little effort. Just type these questions in Google itself, you'll get an answer. Few minutes of efforts only is what is required. Every month you may have to do these exercises when you see we have entered into euphoric stage. First thing that you need to check, the world's GDP, India's GDP and listed companies' earnings. In the recent years, at least in the last 3 years, has the GDP data and companies been posting earnings growth? I would say that only in the last 2-3 quarters and only in India that it is happening that the companies are posting good growth. GDP in India it is 6%, which is our benchmark is 8%. World GDP is already flat, so this is nowhere near. That means crash question doesn't even come into picture. I would can assign 1 or 2 points because India's GDP is little better. World GDP is totally crash. This entire score is 100. So in the first segment itself, out of 20, we get only 2 marks. On 100, what is the score you get? That difference is the distance from the crash. Let's say on total I am getting 70 by 100. That means we are still 30 points away from crash. If I am getting 50 by 100, array crash is still far away. If I am getting 80 by 100, be vigilant, be ready, get out anytime. If you are getting 90 by 100, we don't remain, we just exit. We won't wait for 9500. Then it will go to 91, 92, 93, and any time in 90s the crash would come. From 80 itself, we have to start our preparation to divert our funds from stock market to gold, silver. And automatically you will see that all the points that we have discussed so far in the slideshow of the euphoric stage, maturity phase, all that will also come into picture automatically with this. So if the GDP has been growing in the last 3 years 5 points, in the last 4 years 10 points, in the last 5 years the economy has been very very good, exciting and all, then we would give full 20 on 20. That means at least I told you till 2024 we have to wait. Then the points here will be 5. Then could be 2025, 26, 27, or maybe till next elections 2029 things will be good, maybe. If Sensex only becomes 70,000, then we'll have to wait for more time. If the world GDP and all that is not growing, then we have to wait for more time. Then the entire decade belongs to India. That bull cycle of 15 years will get extended to 20, 22 years. It is 15 to 25 year cycle, remember this. We'll have to wait for more time. But good, whatsoever, we want to enjoy that entire time period. Whether it is 1 year, 2 years, 5 years, we will enjoy it because market will be in growth phase. At least 3 years of back-to-back earnings growth has to happen. I would say almost 1 year has happened, 2 years are still there, and even after that we'll be here. And the world has not yet participated, first of all. This growth has to come globally, not just in India. So do not worry about market crash. Anybody talks about market crash, just laugh at them, that's all. It doesn't mean that market will not fall. Crash and fall, I told you what is the difference. If fall comes, you have to put funds right now. But if crash comes, we will wait for to put the funds. Right now, V shape, sharp V shape like I shown in the T-bond cycle. That kind of pattern will happen in stock market for the next 3-4 years. We are not going to move up smoothly. The vehicle moves with 200 kilometers, the speed goes down to even 20-30 kilometers, and speed breakers will come. Pitfalls will come. But accident will not come. Understand the difference. The vehicle will slow down. The vehicle may skid. The vehicle will experience speed breakers. The vehicles will experience reduced speed. There will be brakes applied to the vehicle. But again, the pickup speed will come to 200. The vehicle is still moving with full energy. But yes, when it goes into thrashes, that time is still far away. World economy and stock markets. Is the world economy and stock market in growth phase, and are the stock markets buoyant in the recent years? I should say yes. The world economy is into growth phase because now we are seeing that IT companies are falling and all economic stocks are rising, but this has only happened in the last 1 year, not year. So that's why I have assigned as 3 out of 5. But if it is for a very long time, then we would put 4. Very long time, 5 by 5. Inflation and central banks interest rates. Has inflation been increasing the last few years? No, not last few years. Last few quarters, yes. The last 1 year, there has been an exceptional rise in inflation. Domestically and internationally, yes, both of it. That's why you have seen that interest rates, fixed deposit rates are rising. But when it is happening, only in the last 9 months, 12 months we can say. So that's why I can put here as 2. So few months back when I was taking, When this figure was zero, we did not have any rise in interest rates, but now we do have it. So this, when these numbers are increasing, it means that we are entering into the last part of the phase. Banks. Is the bank credit growth been impressive in the last few years? Few quarters I can say. Yes. Are private banks NPA falling or remaining static? Only in the last 3 months that the NPAs are falling. NPAs are falling and banks credit growth is rising. This is happening in the last 2 quarters. Is panic buying felt in the stock market given impressive returns over the last few years and especially in the last 3 months? No. Last 3 months has not been good. Last few years I told you average returns has not been good, not been worse also. There is positive return. So I can say 4 at this stage. Are highly leveraged companies, metal stocks, power, infrastructure, capital goods outperformed in the last few years? Again, 3 months, 6 months I can say yes, but not few years. Are the smaller micro cap beating the main indices decently? No, this also no. So maybe 4 by 9 is a conservative value that we can assign. So how much does this come to? 5. This is okay. Out of this is 14, and here 3, 2, 5, 7. Third one. Nifty P ratio. This we will be discussing later when we come into fundamental analysis. But right now I want to show you what is the P ratio. You can just type this in Google. NSE India itself gives this ratio. So the P ratio currently is at 21.15. And if it is at 21.15, only one mark has to be assigned. Okay. And then P by B ratio. Let's have a look at that as well. All these ratios we will understand in fundamental analysis. Right now we are just capturing values, that's all. 4.18, 1.26. Dividend yield is 1.26 and price per book value is 4.18. So 4.18 means we come here 2 points, that's right. And 1.28 means we come here, that is 3 points. So this is all good. 3, 2, 1, totally 6. Okay, next slide. IPOs. Has there been record number of IPOs issued recently? No. The last 6 months, I should say, has been very, very dull in IPO. So it's not even to just one. Hold on, guys. I'm getting a call. Hello. Yes. Hi, Akash. Yes, hi, Akash. ఒక్క నిమిషం నేను మీకు 10 minutes ఫోన్ చేస్తాను. Mutual funds and demat accounts. Is there a surge in number of new mutual fund accounts? No. Is there a surge in demat accounts? Yes. Mutual funds, I cannot say exactly no also. Folios are increasing, but not with that speed. Right now, there is little bit fear among the crowd that Ukraine-Russia war may get intense or there may be recession, something like that. So let's wait for that. Are some people like drivers, barbers, maids, laborers are asking about how to debut in the market? No, that kind of excitement has not yet come. So maybe 0.5 or 1 is okay, no problem. Is NBFC funding for equity increasing at brokers over a time period? Are some people thinking of taking loan to invest in the market? This is strictly no. Because I get this data directly from IIFL. Clients are very fearful. They are remaining in cash. Forget about taking loan. They are not putting their own full funds. That much fear is there. That's why this is totally zero. Small and micro cap stocks. Are small and micro cap stocks hitting upper circuit day after day and outperforming the indices? No. This also no. So only 2 marks here. Okay, the next slide. Is entire public positive bias on the stock market and no one talks about correction? There are some people talking about correction, and then not people are not that excited also. So it is average. 1 mark is okay. Are experts and analysts giving only buying tips through print and digital media? No. Some are giving buying, some are giving selling. So this also can be set as one. Are the stock market analysts in media giving ambitious target on indices? Again, I can say half of them are bullish, half of them are bearish. So again, one. Are people talking about impressive paper profits and discussing small and micro cap stocks in the social events like wedding? No. I still see that excitement missing. Social events, hot topic is not stock market, at least for now. Are general leading newspapers non-economic giving headlines and unprecedented improving economic conditions? No. There's no talk about economy at all. So this is only three. No change in the last few months. Is the gold and silver CAGR returns from the last 3 years down to last 10 years? What does this mean? 3 years back, that means we are in 2022. So 3 years back is 2019. From there, 10 years back. Between 2009 till 2019, we need to check it. What has been the CAGR returns on gold is what we have to find, and the CAGR returns in gold has been very very less. It is less than 4%. If you see in 2010, the price of gold was almost the same what it is today. It was 47,000. Now we are at 51, 52,000. So here we can assign as 8 marks. If the returns in gold has been very good, then this value would reduce. Is the real estate CAGR returns in the last 3 years down to last 10 years is much below 12%? No. See, in fact, in the last 3 years, real estate has been little good. I can assign here as 6. It is not much below 12%. It is average of 12%. If it is very very low, then this value would increase. So 6 plated, this is 14. So this was your last slide. Okay. So how much does it come to? Let us calculate from the first slide of this exercise. So 7 marks, 5, that is 12, plus 6, 18, plus 2, 20, plus 3, 23, then 37. That is all. We are still 37 by 100, guys. So that fear of crash should not be there in your mind at all. It is still a long, long way to go. I told you at least that reading has to come to 80. Even then we don't exit, but we are mentally prepared that anything may happen. Maybe some hedging strategies we can deploy. But we are still far, far away from crash. From 37 to go to 80, index has to minimum double. So don't worry till 2024 end. Be excited if the fall comes. That is how your mindset will change. So this knowledge is very important for you. That is all, guys. So we are done with the market cycles with this slide, and then tomorrow would be holiday Sunday. Monday we are going to begin with fundamental analysis. So interesting topic. By this fundamental analysis, you'll get to know which stocks you should be buying. We'll be doing fundamental analysis on quality of management as well as on the numbers of the company. The balance sheet, profit, loss, net profit margin, return on capital, return on assets. So many things are there to check in a company before we enter into it. That's all. Any questions or doubts, you can now use the chat window or the audio control. That's all from my side.